Welcome back. We're joined now by Buffalo State's co-director for the Center for Economic Education, Fred Floss. Fred, thanks so much for joining us tonight.
Thank you.
Well, so, of course, today everyone is talking about the sweeping tariffs that President Trump has enacted on all or majority of U.S. trading partners. So ranging between 10 to 49%. So the question, of course, everyone is wondering, what exactly does this mean for the economy, both long term and, of course, short term?
Well, the 10% base on everything is essentially a sales tax. So it's going to raise the price of all imported goods in the United States. And why that's really a problem is because we normally don't tax, for example, food. Well, now we're going to have a 10% tax on food. And we have to remember during the winter months, we get a lot of food from South America because it's too cold to grow any of that here. So that's going to be a problem, particularly for those lower income individuals. It's really a regressive tax, and poor people are going to really see the brunt of all of this.
Are we going to see something right away, or will it take some time before we see the effects?
I think it's going to happen a lot sooner than people think. It might not happen tomorrow, but we're already starting to see prices go up in anticipation of some of these taxes. And it's going to be widespread as well.
What could it mean for Western New Yorkers?
There are a couple of things that Western New York will see that are unique to border cities. So Canadians aren't going to come here to buy things. So our sales tax revenue that the county and the city depend on is going to go down. They're not going to come and visit Niagara Falls. So the bed tax that we get and the money that is spent in the malls there, because we keep on forgetting in Niagara Falls and even the Galleria, they're really were built for the Canadian market. Yeah. So if Canadians don't come here, then that's going to hurt a lot of people's business.
I feel like I've seen fewer and fewer Ontario plates just within the past few weeks, and I'm sure that will continue to be that way. Have we seen tariffs of this magnitude before?
We haven't seen anything like this since the Great Recession, or the Great Depression, excuse me, in the 1930s, which basically caused huge amounts of problems, and the United States didn't get out of that depression until World War II, some, 15 years later.
So, something I found interesting, the president held this address today in the Rose Garden. It happened just after 4 o'clock. Of course, that's after the closing bell for the New York Stock Exchange. What do you expect to see happen tomorrow when the opening bell rings?
Well, we've already looked at the futures, and they're going to tell us what's going to happen tomorrow. And for the Dow, it's already down 900 points. For the S&P 500, it's down about 200. So we're looking at a 3 to 5% drop in these markets, which is very, very sizable. And I think people are going to start to worry.
Sure. The president, of course, saying that this is all designed to boost domestic manufacturing, American manufacturing. What is the likelihood that that can happen? Can it apply to everything that we import?
I guess the question is short run versus long run. In the short run, this isn't going to have an impact on manufacturing. And the reality is the reason manufacturing jobs have gone down is because of technology, not because of trade. So even if you bring new plants into the United States, if they are built with robots and other new technologies, then we're not going to create the kind of jobs that he's expecting.
All right, Fred, thank you so much for joining us. This is such a developing, interesting topic that I'm sure we will continue to have you come in and talk more about it with us.
Great, thank you.
Yeah, absolutely.